Hello, Mike Petry, president and owner of M&M Mortgage. Sorry for the dress down look today, just working from home. And I get the pleasure of doing today's M&M educational moment. And today I get to talk about Fannie Mae and Freddie Mac. So let's get right into it. I went right to the source. And just basically a website that just defines Fannie and Freddie and gives the history of them. So let's do a quick history lesson to start. Right down here, Fannie Mae was first chartered by the U.S. government in 1938, quite a long time ago, to help ensure a reliable and affordable supply of mortgage funds throughout the country. Today, it is a shareholder-owned company that operates under a congressional charter. And then Freddie Mac, they were basically chartered in 1970 and do the exact same thing with just a little bit different underwriting guidelines at the end of the day. So let's go right up here and just go over just kind of the definition and just the explanation on who they are. So Fannie Mae and Freddie Mac, as we just talked about, were created by Congress. They perform an important role in the nation's housing finance system to provide liquidity. That is the main role right there. Stability and affordability to the mortgage market. They provide liquidity to thousands of banks, savings and loans, and mortgage companies that make loans to finance housing. One more paragraph I'm going to read. Fannie Mae and Freddie Mac buy mortgages from lenders and either hold these mortgages in their portfolios or package the loans into mortgage-backed securities, otherwise known as MBS, that may be sold. Lender use the cash raised by selling mortgages to Fannie and Freddie to engage in further lending. So the main role for Fannie and Freddie is to create liquidity, like it said there, and effectively here's how it works. I mean, if let's say a certain bank has $100 million to lend, mortgages on, and let's say they exhaust all that money, they run out of the $100 million that they have in deposits to do mortgage lending. At the end of the day, now they can't lend. They don't have money to actually lend anymore because they've exhausted all their reserves, to lend. So basically, Fannie and Freddie were created back in the day to come into to that bank, buy those mortgages from the bank, at the end of the day. And then that frees up cash for them to continue to lend and continue to keep the market, liquid at the end of the day. Okay, so it's just basically they are created to create liquidity at the end of the day, and it's that easy. The other thing that Fannie and Freddie are there for is to really have a standardized underwriting system too. So both of them have guidelines. Each one of them are a little bit different, but they have guidelines on underwriting for qualifying clients and such. And those guidelines are relatively restrictive, and it makes sure that good loans are being done for people, and that people have the ability to repay those loans. Back in 07, 08, a lot of banks and lenders got away from Fannie and Freddie and started doing a little bit different and more exotic lending at the end of the day. That was kind of more their own, and you saw what happened in the mortgage marketplace. So so that's another big reason why Fannie and Freddie are out there at the end of the day. So if you have any questions about any of this, feel free to reach out to anyone at M&M Mortgage, or just log on to our website at www.themmmortgage.com, or just search us up on Facebook and message us there. Hopefully you guys learned a little bit today, and I hope you have an outstanding day. Thanks. Bye-bye.